Alright guys, this is a quick midweek overview of what's been happening in the marketplace. I thought I would just quickly do a 360 brief to kind of see what is happening in the market, where the money is moving out of, where potentially the money is moving into, so I can look at positioning myself a little bit better and see how I can be on the winning side and try and crush this market. Now, this is an article that came out on the 17th, which is Wednesday today, from the Financial Times. There are a lot of people worried about inflation right now, but Powell isn't one of them. Last week, the most powerful central banker in the world made clear that the US economy is nowhere near strong enough to meet the Fed's criteria for tightening its monetary policy. So currently what is happening, there's a bit of jitters in the market right now. The way I can show this, if we look at the US 100, which is the NASDAQ 100, you can see this has just been going parabolic. This is a rising or ascending wedge. This is not a good sign. So there's a lot of jitters here that people are expecting quite a market crash, potentially all the way down to there or wherever the case is. They're a little bit nervous right now. The market's quite nervous in that sense. So this is where this is all coming about. There seems to be a little bit of market fear. And what I've noticed is if we have a look at the US 10-year yield, now there's two instruments that you've got to pay attention to. The most powerful entity on the planet, which is the Fed. You got to hear what they're saying. You got to watch their actions, what they're doing. The other second most powerful indicator that you've got to be paying very close attention to is clearly the US 10-year yield. And the reason for that is how this works is the 10-year yield, if it's going up, what that means is money is going out of the debt market and it's going into riskier type of markets like stocks and speculative commodities or cryptos or whatever the case may be. The reason for that is it shows that there is clear global confidence in the US economy. So it's a sentiment indicator. It's got a inverse correlation to the bond side of it. So when the yield goes up, the bond goes down. When the yield goes down, the bond goes up. And when the bond goes up, that typically indicates that there is fear in the market and people are looking for safe havens. And one of the safest havens is actually the US Treasury bonds, which is the 10, 20, 30-year-olds, whatever the case is, or bonds, Treasury bills. So this is an extremely powerful indicator that you've got to be paying attention to in order to find out how to position yourself, where the markets are being jittery and where money is potentially flowing. From that, you'll be able to make more astute decisions in terms of your trading and also in terms, most importantly, in terms of your investments. So even the US 10-year yield, it's looking scary. I mean, we've got a ascending microphone or megaphone pattern that seems to be forming here. It's hit the top of this megaphone pattern. It seems to have wanted to do a breakout, but due to the resistance, seems to have popped back in. So there's a little bit of jitters. And this is what you're starting to see. This is why there's a little bit of a sell-off that is happening in the NASDAQ, the FTSE 100, and also the DAX in Germany, and this is also the CSE, which is the French stock exchange for the top 40s. So you're not seeing massive sell-offs, but you're starting to see a little bit of jitters here. And that's simply because people want to see what the Fed's next moves are going to be. Their statements on inflation or, their fiscal policies. Are they going to be doing more stimulus? What is the plan? So hence why there's a little bit of jitters here, because the NASDAQ is, and pretty much all of the US indexes are pretty much on knife's edges here. Hence why you can understand the jitteriness of what is actually happening. Again, the US 10-year yield looking very scary. So if this cannot break through, then I'm expecting a slight, very small correction happening in the markets. Now, when this happens, you're going to start seeing the news outlets calling economic meltdowns, and just please don't pay attention to it. This is the only thing that matters. If it breaks through this and it goes down, particularly bounces back up here, retests this, and then goes back down, gets rejected and goes back down, well, then start looking at, a market crash on the horizon. But currently what I'm seeing is money slowly being de-invested out of Europe, also out of the US, and funny enough, going into safe havens like the US dollar. So this is why you are seeing a slight rise in the US dollar itself. Oil today was actually rising, was actually in the green, but I see there seems to be a little bit sell-off, but this is a really great sign in terms of oil. So we've got a massive descending wedge occurring here. Seems to have broken out. We could look at a retest down to this area, bounce up, test, support, and then bounce back up again. So oil's looking really good. There's definitely a catalyst in the mix itself. So one of the catalysts I had a look at was the oil Supercycle. So as you can see, it seems to be going into its new 12-year up cycle. So we are entering into a bullish oil cycle. So this is something to look for. I thought this was a lovely graph to show. Just out currently now, the US shale could face weeks of depressed oil production due to cold. In other words, demand, there's going to be lack of supply and there's going to be greater demand. So that means oil prices is going to push up higher. So as you can see, US deep freeze will wreak havoc on oil and gas productions for several days, if not weeks. Most likely weeks. You do not just go and push a button and this thing just starts off automatically. There's an entire process. It doesn't work like that. There's an entire process in order to restart these oil pumps. So it's simply just not a press of a button and then automatically it starts again. Hence why most likely you're not looking at several days. You're actually going to be looking at several weeks. This actually has the potential of what is called a price push up inflation. If that happens, hence the Fed's going to have to relook at tightening its monetary policy, particularly with an inflation on the horizon. So hence why you could start seeing why the markets are looking a little bit jittery, but I am expecting oil to go up. If we have a look and see what's happening here in silver, as you can see, this is forming a very nice bullish pennant itself. It did try to break out, but it got rejected. So it's still within its pattern. We could see a pull back to around about there, but that's fine. That's the silver being silver and being cheap again, and it could bounce back up. If it fails here, we could likely see a test round about there again, its target round about there, and then shoot back up itself. So either way, it just means silver is just going to be on sale. But it just shows that there is some sort of market jitters that's kind of happening right now. That's kind of just keeping me awake and seeing what is happening and where I could potentially move to. We've got the same with gold itself. So again, a descending wedge here. It seems to have broken out here a bit, but I wouldn't stress too much. It just seems to have formed a bit of a support here, but it could break back in there and then ultimately back out itself. So again, just watch gold a bit. If this continues down on this downtrend, perhaps might retest, bounce off here, and then we could look at a potential support line round about there. This is still very healthy at the end of the day for both silver and gold. You would expect a good healthy correction happening. Again, please, you got to watch what's happening here. You got to watch what's happening here. If this goes down, it will affect what is happening over here. So we could see a healthy correction and then bounce back up again. And this is what markets do. This is what these commodities and the stocks, this is what everything does. Right, if we have a look and see what is happening at platinum, platinum's also again just been on a fantastic run almost for a year, just going up and up. It seems to have reached a bit of a resistance line. So I'm expecting a bit of a pullback again to a supporting line here. This is actually pulled out of a wedge itself. Let me just zoom out here. I can kind of just show you. So it's kind of just pulled out a little bit out of its wedge here. So I'm expecting to pull back here and then again lift off to the top and potentially go and challenge for its all-time high 2008 round about there. So I'm looking forward to platinum. I did invest in platinum when it reached about here, so it's looking pretty good. If it bucks to about there, I'm just going to invest more because I do believe that platinum will do extremely well this year itself. So the other side that I want to look at, I found a very nice article from Visual Capitalist. And emerging markets, a growing set of opportunities. And I actually agree with this. So I'll put this in the link. Have a look. There seems to be a lot of drive, particularly from institutional investors that are looking towards the emerging market. It's a little bit of high risk, but high rewards itself. So as you can see, pretty much looking at Brazil, India, Indonesia, the Philippines, particularly mainly the South Pacific Asia that has the highest potential there for growth. Well, good return of investments in terms of emerging markets. They're very into latest technology growth and so Indonesia, the Philippines and Thailand is really looking exciting. And also India to a certain extent, particularly when it comes to looking at become the new supply chain and threaten China in terms of being the more reliable supply chain to the rest of the world. So, but for me, definitely Indonesia, the Philippines and Thailand. The only thing that I'm really sad not to see on here is Africa. I do think Africa has the potential itself as an emerging market. That there is a lot of potential still to be done here in Africa. Africa seems to have, in a sense, matured a bit. There's not a lot of infights and civil wars, things that we've kind of been used to from Africa in the past decades. So Africa seems to have gotten a little bit stable now from that aspect, and it seems to be a bit of a maturity that's taken place within Africa. So I would like to have seen Africa on here because I do think there is opportunities still in Africa itself. But definitely, I'll put this link in the descriptions below. Go look at it. I'm definitely keeping my eyes on the emerging market, particularly if there is a correction that's going to be taking place itself. Let me go here rather. Particularly if there's a correction that's going to be happening, and particularly if there is going to be a so-called economic or market crash, a stock market crash itself, because the rest of the world will potentially follow. This means that everything's going to be on sale. So I'm definitely, as soon as things go on sale, I'm definitely going to be hitting the emerging markets themselves, because I do think there's a lot of opportunities in the emerging market. So I'll put this in, read through it. I think this is a fantastic resource here. Hours spent per day using the internet. So as you can see, I mean, these guys are very into technology and internet, economy. So it gives a very lovely breakdown to look at some of the tech giants in these particular countries. So there's opportunities, guys, everywhere. You just gotta look around and weigh the risk and weigh the rewards. But as potential high rewards, yeah, I can see why people are looking towards the emerging market itself. So this also brings us to the final segment itself. All hail the mighty Bitcoin. And there's a reason for that. I mean, Bitcoin has done phenomenally well this week, last week, also on the weekend. I mean, smashing 50. It's again new highs, 51,000. I mean, US dollars. It's insane. I mean, how difficult is it now to predict 100,000 US dollars for Bitcoin by the end of this year? So that's just hopium on my side, but at the end of the day, it's not really too off to actually think about such figures. this is pretty much reaching its trillion market cap. So Bitcoin's smashing it. It is the daddy right now, and it is absolutely smashing it. So I just want to just pull back here. If we have a look, let me just get that out. So let me have a look here. I mean, I'm expecting a pullback. There's got to be a healthy correction here now. I'm hoping that there will be, because it just means more buying opportunity. But this is completely insane right now. So this has got to pull back. It could certainly pull up, I mean, to 60,000 before we see some form of correction. But I'm hoping the correction will come now and form a floor and then bounce back up. This is how it works. It goes up, comes back down, forms a floor, and shoots back up. Forms a ceiling, comes back down, forms a floor, shoots back up. I mean, this is how it works at the end of the day. So, but this is looking really nice for Bitcoin. So, absolutely the king right now. But please, you've got to pull back now. Particularly, I want to buy more again and cheap. And but it's in order for it to really go higher, we need that healthy correction in place. So I'm hoping that this will pull back. So Bitcoin, again, just dominating it. So I thought this was an awesome meme. If Bitcoin was ever a personality, it would be Elon Musk on steroids. So I thought this was a pretty cool meme itself, because that is exactly how Bitcoin is feeling, like the daddy. And yeah, man, all hail Bitcoin. Fantastic, fantastic asset right now. Other interesting thing that I quickly found about Bitcoin miners posted $354 million US in revenue last week, breaking record from 2017. I mean, if you're a Bitcoin miner, man, well done. You're profiting and you're killing it. So honestly, well done. As you can see, our miners are incredibly bullish on the future of mining. January and February 2021 have been record months for most of them, and they are taking all of their profits and reinvesting it back into their business to grow future hash rates. This is telling. You got to be very careful here, because if the miners are actually taking profits out, then expect a pullback, expect a correction happening fairly soon then. I hope that's the case. I hope we are going to see a pullback, and perhaps a pullback either down to 40, maybe down to 30 would be even better. Because you just buy it cheaper and then shoot back up way past 60, 70 and upwards. I'm hoping for that. It would be nice to see that itself. Another thing that I found in the news, which is again just fantastic Bitcoin endorsements, is the Dubai government licensing entity now accepts Bitcoin for payments. So pretty much any of these apartments, you can just buy for Bitcoin now. I believe this is a trade-free zone itself, but yeah, they're accepting Bitcoin. I think this is lovely to see. So even government adoption into cities where apartments and buildings, and things like that can be bought with Bitcoin. I think this is fantastic to see. So the link will be in the description. This is from bitcoin.com. So have a look at that. So the future is looking very bright for Bitcoin itself. So this is well played from Dubai on that one. Lastly, I just want to quickly end with one of my favorite followers. Well, Jeff Broom's not following me, but I mean one of my favorite guys that I follow. And let me just correct myself there. Itself is Jeff Booth. If you don't know who Jeff Booth is, I would recommend that you go and get his book. It's called The Price of Tomorrow. Jeff Booth is one of the tech giants and very clever guy itself. And he posed a question here to Bill Gates saying, how is it possible to solve climate change from an economic system that requires inflation? So Jeff Booth, from a mindset, if you go and have a read in The Price of Tomorrow, he's all about how technology drives deflation and ultimately making things pretty much cheap or free He uses like the codec camera itself, or even like the MP3 player. I mean, that's all built into your phone. It's technically free now. I mean, you can just take photos as much as you want without going into a shop and paying to get the films developed. And it's also with an MP3 player. It's completely free. I mean, you can just download a software that's free, and you got MP3 music till your heart's content at the end of the day. So, and this is what he's trying to get at. He's coming with that mindset, but he's also an extremely Bitcoin enthusiast itself. So he's challenging Bill Gates in a sense. How are you going to solve climate change when prices are skyrocketing? For instance, like solar panels and things like that. I mean, they're still quite bloody expensive. Based on an economic system that inflates money. Okay, it's not deflationary. So you're going to carry on having this, prices going up and up and up. That's ultimately going to defeat the main goal of trying to, solve climate change. Fix the money, you fix the climate. And that's pretty much what he's coming to. So I thought this was an excellent challenge to Bill Gates itself. It would be great if Bill Gates actually responds to this. But please go check this guy out. His name's Jeff Booth. He's also on YouTube. So very, very smart cat indeed. All right, guys. So that's just my midweek updates of what's actually happening. I might do one on Sunday just to see what is going to potentially happen for the following week. So yeah, guys, please comment down on the comment section below if you enjoyed this, if you found some value out of this. But otherwise, guys, peace out, and yeah, we'll chat again.